$3 trillion daily, then you can realize that the mass adoption of cryptocurrencies would mean that this has much more room to go.
Good morning, easy cryptocurrency subscribers. This is Bitcoin Charlie again. Today we are honored to have a very special guest. He is the editor and in charge of one of the premier finance groups and runs the website of the Wealth Research Group. He offers a ton of financial information on that site. And let me introduce Lior Gantz. Welcome to the program, Lior.
Hey, thanks for inviting me.
Today, let's talk about Bitcoin has been on quite a tear since January of 2017, when it was roughly $800 a coin. Today, it is hovering around $4,000. Do you think this trend is going to continue?
Well, I think in the near term, yes. But there are other altcoins that are presenting some fierce competition for Bitcoin, and it will be up to the developers and the community effect to see where Bitcoin is going from here. It has its problems, but the sector itself is so strong and so hot right now that the price can go up despite problems and despite Bitcoin losing market share to other coins because new money comes in all the time. So essentially, figure if the market cap for all cryptocurrencies was capped at what it is right now, at 150 billion, and money was just moving around from coin to coin, then Bitcoin would lose some of its market share because some of the other coins are becoming very competitive. But new money is coming in, and Bitcoin is like the flagship. It's the mother, it's the mothership. I think it's going to continue higher just because of the fact that there's so much speculative money coming in there. But in the big picture, Tim, Charlie, they have to really get their act together because there's a lot of problems that they need to face in order to remain the premier coin.
Okay, would you say that Bitcoin is in a bubble or altcoins are in a bubble at this point?
No.
Do you think that, well, I guess based on what you just told me, you don't think that it's probably going to slow down anytime in the near future?
Well, let me put it this way. The market cap for the entire cryptocurrency space is 150 billion. You and I know several companies that are bigger than 150 billion. And, if you think about the mass adoption of cryptocurrencies, these are currencies. These are not companies. So if people use currencies, which people trade currencies on the Forex every day for $3 trillion daily, then you can realize that the mass adoption of cryptocurrencies would mean that this has much more room to go. The network effect, Bitcoin, is so developed right now that if there was a mass adoption, it would fly a lot higher. On September 18th, Wealth Research Group published an alert about the first publicly traded blockchain cryptocurrency company. That company tripled in a matter of 4 days. So the connecting bridge between traditional markets, which have the bulk of funds in the world, going into this little hose called cryptocurrencies, that will widen the hose. And you can go to wealthresearchgroup.com/must to get the research on this company and understand why this is just the first of many companies that I think will follow with regards to getting traditional investors involved with Bitcoin or other cryptocurrencies.
Should we mention that company? I believe you're referring to the company of Hive.
Hive, yeah, Hive Blockchain Technologies. It started trading at 74 cents Canadian on September 18th. It reached a peak of 227. I think it's trading around $2 Canadian right now as we're doing this interview. And they just announced a $30 million bond deal financing with one of the co-founders of PayPal getting involved. And they're looking to expand facilities from 1 to 4 facilities. So figured that this is a hyper growth story, and they have other things at play. I'm very, very excited for our subscribers, obviously, that got involved on the IPO date, and we are actively researching many more opportunities in the natural resources sector, in the cannabis legalization sector, and obviously in the blockchain sector, on top of our usual backbone, which is the dividend companies that we suggest people always hold in their portfolio.
Let's move on over to the blockchain. If the entire financial services industry is shaking, including all the major banks, how do you think this is going to fare for the cryptocurrencies that we're discussing right now?
Well, I think in terms of shaking, it's not that easy, right? So fiat currencies are lawfully mandated to use. We must use them. That gives them that network effect that gives them their relative value, right? So you must pay taxes with it, you must pay utilities with it, etc. So it's not like they're going to go away, and it's not like they can default. It's a system that can stick around forever. Its only problem is debt. It's the mounting debt. But the system itself, if it's ever going to reset, it's just because of panic. So the society, us, the people, can lose faith in it, and therefore it will collapse in and of itself. But the system, if panic doesn't occur, this system can run and just have more and more debt until the debt is too large to get serviced, and then they need to reservice the debt, cut some of the losses, etc. But this is between governments. Within the fractional reserve banking, the commercial part of it, so JP Morgan, Wells Fargo, HSBC, Barclays, all the major banks that have licenses to create credit for our economies, for mortgages, for car payments, for consumer debts, etc., they will have to adapt to what's going on. They're becoming irrelevant with their costs. Their costs as third parties are going to get cut and very competitive. So at every blockchain conference I go, at every Bitcoin conference I go, you see JP Morgan people over there, you see IBM people, Microsoft, Cisco. They're all looking at how they can adapt and adjust to blockchain technology and put some of their services on decentralized databases. So this is where the financial services industry is going. This is where title and land is going as well. So you already saw that the governor of Delaware is starting to put all the archives on a blockchain. The blockchain is a database. So there's many industries that are better off going on to that database, and the financial services industry has already proven to be one of them. So whether or not they're shaking is who knows, right? But they are going to need to adapt to this, and there's an opportunity within this for pioneer investors.
Interesting stuff. Hey, I'm glad you brought up that debt scenario, because that's been one that's always kind of puzzled me. If we have all this debt out there and we start moving over to cryptocurrencies, does this debt truly get destroyed, or does the debt disappear? Or I guess in the macro sense, what's the best analogy of that the average person could take away from this?
If I were to snap my fingers and all the cash, all the savings in the world would move right now to cryptocurrencies, there would be debt owed on all of the federal or governmental levels. A lot of people that owe money to banks, etc., those debts will not be wiped out. So in a debt-based system, in a fiat currency system that is based on credit alone, there's always more debt than actual principal. No, it will be horrible for the system, and it will lead to wars. Wars will be fought over this debt. Just figure that the U.S. alone owes $21 trillion, close to $21 trillion, and not to its own citizens. It owns it to foreign institutions, to foreign governments. Do you think, would you agree to take a loss of $3 trillion on your bonds if you were China? Obviously not. There's many political issues that will need to get resolved when the system deleverages and moves on to a new phase. It's obviously reaching the limits of the phase that it is in right now. You can't service more debt. If you're the U.S., you can't service more debt indefinitely. It's not like their population is growing as fast as Asia. It's not like their GDP is growing as fast as emerging markets. And there's a limit to this. So figure if they're going to delay this, for example, they're not going to cut their military expenses. Well, that means less education expenses. So your educational system goes and becomes even more mediocre. And that produces less tax revenue in the future because these people are less skilled to work, right? There's always a price and there's always a sacrifice, and we're reaching the point where major changes are on the horizon. You're already seeing the monetary aspect or the monetary policies that the Fed has dictated for 9 years now being obsolete. They can't keep doing what they've done. So it's moving on to the government to take care of this, and this is called fiscal policy. So now you see a tax reform for the first time in 30 years. You're going to see austerity probably in the near future. You're going to see maybe the delay of the retirement age by a few years, so to 67, then 69, then 72, etc. You're going to see other fiscal policies coming about. My advice is always the same. You've got to build your own financial independence plan. You cannot trust the government because the government is stuck in its own problem and it cannot take care of people. Just remember that the first entitlement program for retirees came about in Europe during the the Industrial Revolution, and it was just a way for politicians to gain votes. So they told people, look, when you hit 65, it was originally like 57 or something. When you hit 57, we'll start paying you. But most people did not reach 57, so that scheme worked. And then they had to raise it, and now we're at a point where people live 80, 85, 90 years. There's the fastest growing group in terms of demographics are centenarians, so people over 100. You cannot live half of your life in retirement and get the working class to pay for that. It doesn't work. Europe is in the jam. Japan is in the same jam. The U.S. is in the same jam. And it's, you can blame whoever you want, but it doesn't matter. The blame game doesn't lead to any results. Results-wise, you got to build your own plan, and that's why I created the wealthresearchgroup.com/crash, which is my blueprint on how to prepare for this and anticipate it and profit from it. And it's part of what we do with Wealth Research Group, with the newsletter, is how to live in the new economy, because you cannot depend on this anymore. That's it.
Hey, on cryptocurrencies, what do you see as the next phase? Maybe how the industry will consolidate?
I think the next phase is many more entrepreneurs are going to come in, and that will force the governments to regulate this even further and make sure that, for example, that ICO scams will be punished, or they're going to try and punish them. They're going to try and find them. They're going to try and make this a more legit industry so they can collect taxes on it, obviously, because people have made amazing gains, and they're going to want a piece of that, right? So that's one thing. Obviously, you should already pay and declare your gains anyways, but it's going to move to a whole new level. The governments might even create their own cryptocurrencies, which would compete with the cryptocurrencies that are already in existence. So there's that government side to this. There's also a social side to this, right? Cryptocurrencies have become a sort of a cult. There are people that are just in love with them, and they study them the same way they studied gold up until a few years ago with gold bugs, right? There's a growing divide between people who just cannot trust fiat currencies anymore, and they're becoming a bigger and bigger part of societies. This is a social matter, and they're going to need to address that as well. Figure that if there's millions of people involved with cryptocurrencies for the reason that they cannot trust the government that they live under, that is a problem. That is a populist problem, and it will need to be addressed.
Okay. On ICOs, how would probably a new investor be best way to describe getting into those and research them and how to figure out which ones are legit and which ones are not? What would be your steps to take, and how would you approach that?
I think the individual investor has to think of ICOs the same way he thinks of any startup. And 90% of startups ever make it to the first year being successful, meaning that they're still around after 1 year. And then half of that is cut until the second year. So when you go in and invest in an ICO, you have a 20-to-1 shot of losing everything, the entire principal. So you are going into a game that has a 5% win rate. My first advice is don't get in. My second advice is if you are planning to do this, you need to know the people behind the ICOs, because just like with any startup, it's the person that builds it that can actually get it to work. There is only one Jeff Bezos. There is only one, Bill Gates. These are the people who have made startups into fantasy companies. But most people do not know how to do this well, and it's as much as it sounds sexy and exotic, you would have more success overall by sticking to assets that are much more, obviously much safer, and have much more data around them. Charlie, there's no magic trick here. It's the same as investing with any startup company, and you can just call any hedge fund that invests in early stage companies and ask them what's the risk involved with giving you money, and they'll tell you the risk is enormous.
Jamie Dimon came out here recently and called Bitcoin a fraud, and he said he'd fire anybody who invested in it inside of his company. How would you respond to somebody like Jamie Dimon calling Bitcoin a fraud when in reality you and I have been discussing that it's almost like it's a reality, it's going to happen, and some of these people are saying it's fake and it's a scam? How would you respond to that?
Jamie Dimon is the CEO of JP Morgan Chase. And as the CEO of JP Morgan Chase, he cannot be bullish on any cryptocurrency because it's eating away at his business model. So calling it a fraud would be his way of dealing with the situation. It's obviously a smart move on his part to try and undermine this, but Jamie Dimon doesn't mean a lot to many people. It means something to people like you and I, but most people don't know who he is, and it won't affect their decision on whether or not to buy or sell Bitcoin. JP Morgan is a seed investor in the Ethereum Alliance, so they're a big supporter of cryptocurrencies wherever they can make a profit from it. Since they can't make a profit from Bitcoin, it's a fraud, and it's just a smart business move, I guess, on his part to try to undermine it. But you and I both know that these Wall Street people are traders. When they go out to lunch, you better bet that they open their smartphones and trade Bitcoin like any other person. They're not avoiding Bitcoin. You can bet that people in NYC, when they see something that goes up tenfold in 1 year, they're trying to get their piece of the pie. And it's irrelevant. Christine Lagarde, arguably one of the most influential economists in the world, and the head of the IMF, the managing director, she just went on a speech with the Bank of England, the Central Bank of England, and said that Bitcoin is essentially part of the future, and it has the potential to build a world with more equality between people. So she doesn't have a dog in this fight, so that's why she can be more open about it. But look, at the end of the day, you got to make your own choice. The people who came into Bitcoin early on saw the vision, were able to market the potential of Bitcoin, have done very well, because Bitcoin is not that different from any of the other altcoins that are competitive to him. It had better marketing, and therefore it has the best network effect right now. But it could have been any of the other ones as well, because there's a lot of unhackable, decentralized international cryptocurrencies out there right now that have the same merits as Bitcoin. Cryptocurrencies, they're a hybrid between a currency and a company, because the more people talk about them, the better the market cap, right? Because cryptocurrencies, because they're programmed to have scarcity, the more people that come in there, the better it is for the existing people. It's part of the early serve mentality of Bitcoin. If you were there at the beginning, you made a lot more money than somebody who's coming in right now. It is a currency that has this effect where the quicker you get in there, if it's successful, the more money you can make, and it's part of the fact that it is a very much a pioneer industry.
Yes, I agree. I think you've nailed that right on the money. I read a report recently, and hopefully I'll interpret this report correctly. It talked about a lot of the hedge funds, and they're classifying Bitcoin as a very narrowly traded market. How would you respond to that?
It's quite true. I mean, try to buy $200,000 worth of Bitcoin today, and you'll see it's a problem. It's not easy. You got to use several exchanges. It's not going to be a fun trip. And what they are looking for is scalability, and they're going to get it because there's going to be a Bitcoin ETF or something of that nature coming out of Japan soon, and I think there'll be other ones as well, and there are going to be Bitcoin investment trusts in the near future where a fund would just buy Bitcoin, store it, and then make that trust a publicly traded vehicle so people can basically buy it instead of buying Bitcoins. Same as gold ETF, whatever, but it's going to be actually backed by Bitcoin, not backed by air like these COMEX ETFs for gold. I do see this progressing, but Charlie, the bottom line is that Bitcoin is a currency. It is a currency at the end of the day, and once it starts functioning as a currency, the allure, the speculative allure in it would die off. And, just figure 5 to 6 or whatever, 8 years into the future when this reaches or nears that 21 million, Bitcoins, this is going to start leveling off. It can't just go up indefinitely. There is no reason or no catalyst for this to happen.
One final question. Do you believe the value of Bitcoin will actually go to, say, 50,000, 100,000, or is it even relevant to talk about it in U.S. dollar terms anymore? I keep getting a lot of questions from people where they think it's going to speculate and rise up to, and I'm almost of the point anymore of saying I'm starting to value a lot of my things in Bitcoins rather than in the U.S. dollar.
Well, I don't think we're in that stage yet, because if you go to like a New York coffee shop and you tell him, hey, I want to pay in Bitcoin, and he accepts Bitcoin, he's going to take the dollar amount that it costs to buy a coffee, and he's going to translate it into Bitcoin at that moment. He will not tell you, hey, this coffee is point something Bitcoin as a fixed price. So Bitcoin right now is not acting as a currency to merchants. They are taking a dollar amount, which is most likely or very seldomly changed. Like a cup of coffee is not going to change day to day. It changes once a year, once every 2 years, right? But Bitcoin, to buy coffee with Bitcoin, it changes from 1 minute to the other one. So it's still very much not a currency. It doesn't act like a currency, and you can't peg things to it yet. I think that will be part of the future of Bitcoin, but it's not yet coming. What you are alluding to is the fact that people think that cash is trash. That's part of the reason why the stock market is rising into bubble territories, because people say, hey, you know what? Why would I own $100,000 worth of cash? I'll just buy $100,000 worth of the S&P or the NASDAQ, because they deem it as a no-risk proposition. Because what would you rather own? Apple, a producer of cash flow and dividends and profits, or cash, which is eroding to inflation? People have now, the middle class is now looking at dividend companies as like a bond, which is very, very, very dangerous, because it's not. A stock is cyclical because of profits, and it will go up and down, and it's currently going up for 9 years, so what do you think is going to come next? With cryptocurrencies, you're trying to create the same thing. You're saying, hey, why would I even peg my wealth to dollars? Let's peg it to something else, like a Bitcoin or something. That is also something that is very relative to other things. At the end of the day, what you should always value your net worth in is how much cash you are producing. Okay, what is your purchasing power? In terms of if Bitcoin is going to reach higher valuations, Wall Street Institute just published, if you go on YouTube, a documentary called Bitcoin 20,000 Dream or Reality, and I think Bitcoin 20,000 is a reality.
I would tend to agree with that. I think it's just a matter of time, and I think it's probably going to happen sooner rather than later. So,
the market cap of Bitcoin, if I just may, is less than 100 billion, and so for it to quadruple into 400 billion, that would not be a serious move for a currency. The more merchants accept Bitcoin, the easier this process will be.
I agree, and it seems like we're slowly evolving into that. I think some of us are expecting it to go a lot faster than it has, but in reality, it's already happened in 9 years, which is really fast. So, with that, I'm going to wrap up this interview. I appreciate having you on. We need to do this again sometime.
Hey, thanks, Charlie.
Thank you, Lior. Have a good day.
You too.
Go a lot faster than it has, but in reality, it's already happened in 9 years, which is really fast. So, with that, I'm going to wrap up this interview. I appreciate having you on. We need to do this again sometime.
Hey, thanks, Charlie.
Thank you, Lior. Have a good day.
You too.